for all this to show up on the channels and stuff like that. You might hear some washing machines in the background. I'll try to mute and some people practicing the piano in the background. Some Mary Had a Little
Doing some
Lamb.
spring cleaning.
No, about to travel again. So this might be a good time to tell everybody that the live will be tomorrow's episode instead of normal daily crypto news because I'll be on the road.
Nice.
It looks like I'm trying to give me 1 second. I'm just trying to see if we are actually live on Twitter and Substack, but I cannot see. Yep, here we are. Okay, cool. We're on. We are on Twitter. We are on Substack. Good morning, everybody. Welcome to Daily Crypto News Live. My name is Matt, host of DCN. Kyle is the editor in chief of our absolutely skyrocketing in growth Substack, adding 300 subscribers in a week. Kyle, what are you doing? Are you paying people?
Oh, it's all free subscribers.
Oh, oh,
No.
oh.
Yeah. But no, it's been awesome to see. Really just makes you excited to keep putting out content and doing things when you see the growth, and that's kind of reflective of, I guess, people reacting and wanting to see it. So it's exciting.
I mean, I love it. I love it, man. Good job. Good work to you. Good work to all of the writers. Good work to everybody that is participating. And I'm gonna pat myself on the back too. There you go. There you go. There you go. Everybody pat yourself on the back. All right. So today, everybody, what we're gonna be
That's
going through
actually
it.
so ironically, that's how I started the thank you little letter that we went this week, that I wrote this week
It said you
when
pat
we
yourself on
reached
the
a
back.
thousand. Yeah, that was how I started it.
That's funny. I what? Why didn't I get it? I didn't get it in my email. Weird. See how much I'm paying attention, everybody. What and
Yeah,
what behind the scenes.
I don't know. Substack can be wonky like that. Like it doesn't have the greatest interface, but that's a whole other conversation.
So the conversation we're going to have is I want to talk about the markets. The market is absolutely interesting right now. Bitcoin is trading at a little over 82,000. It has been, I say, steadily dropping all week, even though we have inflows into the ETFs, about $1 billion in the past 10 days. Michael Saylor made another purchase last week. Was it last week or this week? Last week or 2 weeks ago?
I understand he's purchasing every week.
He's purchasing a lot. We have another shift that we'll talk about in a little bit. We have GameStop going into purchasing thinking they're going to raise around $1.3 billion to buy Bitcoin, which is interesting because they have around 4 point something billion of cash on hand, and they're still going to try to raise debt for Bitcoin. Kind of interesting. Whatever. But the markets are down. Cal, what do you see in the markets these days, man? How are you feeling?
I'm it's one of those, like, not necessarily like in the doldrums and like in like a down and depressive state. um Looking at the market, um but not super optimistic about what's on the horizon. I think a lot of the macro news is very much hinging on these Trump tariffs that are coming in the next week. um yeah, what our president has said will be a liberation day, um, in terms of, like, I guess, the markets. Um, but yeah, I mean, this is what they said was going to happen, that there's going to be a little bit of bleeding and people are going to have a little bit of pain for a while. And it's, I don't know if this is necessarily pain, but it's not number go up every day. And so this is something, again, I've just been kind of preaching for the last couple of months, is that the macro news is going to be what influences cryptocurrency for the immediate future. And as you start to see more of these mergers and acquisitions, we'll get into one even a little bit later of a DeSci play, of a crypto project looking to get into a pretty much like a household name. um, and so, yeah, seeing these mergers and acquisitions, you're going to start to crypto is going to have less of the ability to decouple itself from main markets and traditional markets. Um, there was actually a clip I saw this week of Sergey from Chainlink, the CEO. Um, it was like a clip that was cut from the Blockworks Digital Assets Summit that was last week, and yeah, the Sergey Navrov, the Chainlink fellow, I think he's a co-founder, but his clip was basically saying, uh, you know, a lot of the conversations that were happening at this Blockworks Digital Assets Summit was how these two TradFi and DeFi worlds are converging and what type of opportunities that will create. And to me, that's a little bit of a red flag. I mean, then again, this starts us down like a whole other path of like why DeFi exists. It doesn't exist to bring in, all these major players. But anyways, that's kind of what I've been watching.
Yeah, no, those are good points. I do think that we're seeing a lot of over the past week. Like last week, I talked about like the unemployment market, the yields, the housing construction. There's a lot of things that are coming out that are just also very bearish. That I thought we were bullish, and now it looks like more information coming out. Looks like that we could start going into the bearish territory. We see that there's a lot of people behind on their mortgages. Any kind of like a huge mortgage domino falling, we know what's going to happen with that because that's where a lot of wealth lives. And so, boo. They're not building homes, and so we have a lagging construction home builders pricing markets that are not really keeping up with the capital that is in the say S&P 500. We don't see unemployment rising, but with mortgages defaults, higher debt, less savings, and car loans defaulting on as well, then it's like there's a lot of things that are happening right now that don't seem very bullish, as well as once you add tariffs in there, and if there is rises in prices by any means, I think that we could see a lot of things fall off the cliff. And so when it does fall off the cliff, it's going to take crypto down with it, because crypto is very much tied to the markets these days. There's no decoupling. There never was. And honestly, the more that the traditional finance is getting into it, I don't know if there ever will be ever again of a decoupling. What we do see is gold price going up. And unless Bitcoin actually starts acting like digital gold, then we will always be part of this hedge fund, S&P 500 stock trader, TradFi like thing, that gold is still the ultimate hedge that people are kind of going into, which I do think is kind of very interesting that what's happening right now. Could this all turn around at a drop of a dime? Yes, but it seems more likely we're going to get pain in the foreseeable short future, and I don't like that.
Nobody likes pain. Everybody likes stability. I mean, that's what people want: stability and security.
Yeah. Anyway, well, thanks for starting with doom and gloom this morning. And you know what? Look, again, there's a lot of people buying. There's other people like one thing that you said I thought was very interesting is this emergence of DeFi and TradFi, which I don't think that every. Let me make a quick statement. You can make a statement after me, but let's take 1 minute before we get into the news. My 1 minute statement here is is everybody shouldn't be surprised. We saw that there was this democratization and this liberation of the internet at the beginning, and next you know it's corporatized. We are all locked into this data harvesting controlled space that is a far cry from the original ideas. Um, and so this is going to happen with crypto. The only thing that the difference here is, and still applies to the internet, is that you can have the power to have your sovereignty, your freedom of speeches, your freedom of data and privacy in the internet, but you got to be fucking savvy. And the same thing with Bitcoin and crypto. You have to be savvy. Anymore, I hear more people coming on Daily Crypto News and asking questions about this centralized service of crypto instead of like the actual foundation of what it should be.
Yeah, what you just said made me think of open source and how important open source is, and how it's
Mm.
um over time it's almost like a liquid and will flow to the path of least resistance, and will continue to open doors for um, developers and programmers, and for all sorts of things to be built. So just be wary of proprietary systems that can limit that creativity.
All right, so I don't know if I can't remember if we talked about this today, but we are going to talk about Wyoming, GameStop, Safe Foundation, 23andMe purchase. We're going to talk about the curious case of Aaron Swartz. You've been educating me on that, and it's funny, I never even heard of that. You have some bear chain updates, it looks like, and we have some listener questions. We have 50 minutes to get through all of this, so I'm going to start with Wyoming. Wyoming is preparing to launch its first state-issued stablecoin. It's going to be the Wyoming stablecoin, or WYST, with testing set to begin soon, with a full rollout plan for July of 2025, which is absolutely quick as hell. It's going to be redeemable for 1-to-1. And this initiative was authorized by the Wyoming Stablecoin, or I'm sorry, Wyoming Stable Token Act. It was passed in March 2023. Wyoming has been very bullish on crypto. I think that one of our companies is actually based over in Wyoming. I don't know whose it is, but I think that everybody looks at Wyoming as a place to, if you have a company with crypto, you're going to look at opening an LLC in Wyoming. Um, and that Wyoming really has a history of this crypto forward legislation. I think that this is interesting because there's two things that I feel that is going to be part of this conversation. The first one is can Wyoming do this, and is this a currency, and are they actually allowed to, and will the United States federal government actually sue Wyoming for doing this? The second thing I'm really curious about is, if they are allowed to do this, how many other states will actually adopt this, and will we have some sort of kind of like currency war between states that have now their stablecoin? And if, say, California stablecoin is more expensive than Wyoming's, because Wyoming's built on, say, Solana, and California uses Ethereum, and for some reason they have more friction, will people adopt Wyoming stablecoin to transact between states and government contractors and whatever? I just think it's an interesting development and what it's going to be used for. Do you have any thoughts?
Yeah, to get into your point of how this might be something that's historical, is that and I don't know the legalities now, but at least in the past, the United States has had um, different currencies between different states, right? This was some of the early monetary system stuff in the United States. There are obviously problems with that, as you can say. Like, back in the day, um, if one state's valued currency was valued on gold versus silver, right? Like, carrying 2 ounces of it or carrying a certain value of it would have a different weight, or saying a penny in Virginia versus a penny in Maryland um, might have different value. Um, and so for the legality of it, I don't think it will be like a problem. Like, this is something that the United States has seen before. Um, this was similar to, like, I was talking with somebody about the what will happen to student loans at the Department of Education if they get rid of the Department of Education, and it's that the student loans will still exist because there already exists precedent of student loans existing before the Department of Education existed. So there's precedent of previous departments handling these loans. And this is like a similar case. Like, there's precedent in the United States of having multiple currencies. And I don't necessarily think it's a bad thing. Um, I've always been a proponent of the idea of city tokens, the idea of a local municipality adopting a local currency to.
Which Miami
um,
tried to for a while there.
yeah, I actually knew the guy in San Francisco who, or one of the guys who came from Miami to San Francisco. He used to work out of the House of Web3. He helped write the tokenomics for that. So I've had some conversations about this and how, like, viable it is. And there's even groups in San Francisco right now that are using kind of like closed gated um, stable coins. I mean, I for one think there needs to be like a whole uh, This American Life for 60 Minutes on what these people are doing in this place in San Francisco. But they're using this like closed gated stable coin to help homeless people or like marginalized people like living on the streets in San Francisco to like, hey, you have a cell phone, download this app, and if you do like a few like courier deliveries today, your app will have $10 of this like stable coin on it. You can then go use this stable coin at certain approved vendors so you can have food tonight, right? So there's ways of creating this kind of stuff where, for example, imagine Wyoming adopts this stable coin, and then they say, this stablecoin can only be used to build like used for public goods. So what if they say like it can only used for roads and education? You can literally track that on the blockchain, right? It will be very easy to follow where that money will be used, how it will be distributed. And I think that's really one of the positives of this as well, is creating transparency. Um, and then the other side of that, right, is just what we said, the idea of like a sovereign wealth, um, and being kind of separate from the uh, I mean, that's saying it's like, I don't think you would want to be separate from like the U.S. monetary system, right? You would probably have to have uh, all of the reserves of these state coins backed by dollars in your
Well,
own
see, that's
bank.
that's the issue that I think we're getting into, and is that
Hmm.
the legality of this is that, well, of course, that's the interesting thing, is because it says Article 1, Section 10 of the United States Constitution: no state shall coin money, emit bills of credit, or make any things of gold or silver coin tender and payable of debts. The states can't issue currency. Private citizens or businesses can't issue currency that looks or acts like U.S. money. And so, is a stable coin that acting like U.S. money, if it's backed by the U.S. dollar? Is it just a representation of what it is, or is it a different thing? I think there's gonna be lawsuits, Ben. But the monetary,
Hmm.
I guess, upside for them is to be able to mint all these things. Take just like a stable coin issuer, like a Tether or a Circle, is to have a lot of cash on hand, a lot of like these certificates or tokens out there that act like money, and now you have basically a stockpile of reserves that you can invest or use for infrastructure or corruption, as most governments would do. But whatever you want to do with all that cash on hand, you can now do it.
Yeah, are you creating a house of cards basically? Are you inflating it? Yeah, I
I
can
mean,
see that.
and that's the thing about auditing Tether. Everybody was talking about for the longest time. It's like, what? Yeah, fine. You make a stable coin, but then what are the things in place that says, hey, the Wyoming government, the California government, the Ohio government is using that backed reserve asset in a way that isn't that house of cards, that is going to further feel like a domino effect of any kind of financial fallout that you could have in a recession, or 2008. I just think it's super interesting, super interesting.
Yeah. Um, Again, I don't doubt there will be lawsuits, right? Somebody will challenge this. So um, it will likely be the federal government that challenges it.
That's right. Jerome Powell on the move. So anyway, next thing we're talking about, I think that's it for this topic. We already did 8 minutes of that, so let's continue. Um, I'm trying to take a good schedule today, because uh, we want to keep it in an hour so people hang out. But the Save Foundation, this is actually gonna be interesting. The Save Foundation, or do you want to talk about GameStop first? Buying Bitcoin, kind of already touched on that.
Um, I don't mind. We can talk about say and come back to
Okay, we'll talk
Bitcoin.
about Safer. I don't think there's really much to say about GameStop, to be honest with you. They're buying Bitcoin. Let's see if they're going to buy Bitcoin. Okay, cool. Number go up, please. Okay, so the Safe Foundation, they're exploring the potential acquisition of buying the data from 23andMe. So, well, as we all know, 23andMe is bankrupt. They have the data, the DNA data for 15 million users, and of course, everybody said it for the past, however long they've been around. Hey, what are they going to do with your DNA? No, it's safe, but they're going to buy and sell it. And everybody's like, oh, man, now they're bankrupt, and now it's just going up for the highest bidder. One of those highest bidders could be the Save Foundation. And they say that the 23andMe owes at least $214 million to creditors. I don't see how much they said that they're going to bid for the user's data, but it's going to be quite a pretty penny. And what they're trying to say is, that the acquisition will protect personal genetic data and promote user data sovereignty, calling it a matter of national security. And they want to put 23andMe's data on chain. What do you think, dude?
Yeah, I mean, I think I mean, it's very problematic in my mind. I think the whole idea of putting giving your DNA to one of these companies to begin with is problematic. But now you have this situation where um, you know people's DNA footprint is up for sale. Whatever the sale price is, um, it's going to be really interesting to see how they like value it per person. um, because yeah, I mean, I would think that I mean, I don't really know. Like, is it something that's invaluable? Like, is my DNA, you know, is the footprint of it and what it shows, is that invaluable? Um, how much value do you place on that? Um, and is it something that's a benefit for science that say foundation is now going to do this and it's going to be like public, because this gets into this like concept here of like the public data of like, okay, is this going to be on the blockchain? Can people then reference this? Can this be used for science? Can this be used for research? I think there are some positives that could come out of stuff like that if it's like there's anonymity behind some of this data, and then you're able to just judge and make scientific inferences based off that data. Um, but this gets into the concept of like just how public some of this stuff can be. It's like on blockchain, like I know we talk about transparency and stuff like that, but um there is a sense of privacy. Like this is in some ways just like private data, right? This is as valuable as like your Google searches, right? For what people can learn about you. And so um I think it's just problematic because people have already given their this data to them, and so it's up for sale to the highest bidder. So it's interesting.
So my whole thing with this is always like, nobody's. I guess with this you should have known better. 23andMe, you should have known better. But I feel that we've all been bamboozled through the past couple decades about what we're buying and what we signed up for. And like again, I think we spoke about this last week. When we signed up to Facebook, we just want to connect with friends and family and send stupid pictures back and forth and find people from high school, right? But now we didn't know it was going to turn this to this huge data collection machine where you're getting fed ads and they're knowing you and changing your algorithm and then selling your data. You didn't know when you were buying a car that they were going to put pressure sensors in the seats and know what you're listening to while you're talking, and know how fast you're accelerating, decelerating, or what time you're driving and where you're driving, and using that for your insurance data. So to adjust your premiums. We didn't sign up for that. When you signed up for Amazon or these digital streaming services, and you click something like buy, like you buy a movie, and they then make a new contract with a different studio. Next thing you know, they don't have the rights to have you own that video anymore, and they just take it away from you because you're not actually buying something. You're have a perpetual license to rent it from them, which can be changed in the terms and services. And we like all of these different things about data and ownership and privacy has been literally changed throughout the decades in such a way that's so complex and so convoluted that the average person hasn't been able to keep up. And I think that this is just another example of of science and companies and your data being used for profit purposes without the consumer being actually really thought of. They said, hey, you know what, you're gonna do this, we're gonna tell you like maybe if you're more susceptible to some sort of cancers, or maybe, hey, maybe you have a cousin in Kansas, cool. But after that, yeah, I don't think anybody really signed up for this. And then I guess the last thing I would say is like, I also, even though I understand about the privacy and data aspect of this, I don't know what the end stage of this is. You said about the good things, like that's great. The good thing about maybe cancer research or whatever, but we are uplifting coronaviruses. And so how much data do you have to get to make biogenic weapons more efficient, more effective, only niche down on certain things? Like, how is my data being used for research in general? Or what are some things that we haven't thought about that DNA can actually be used for? Are you splicing my DNA because I have some kind of DNA anomaly into crayfish? Now you have Nigerian Polish crayfish out there. They taste delicious. I have no clue. But I'm just saying, it's like, I think there's just been a lot of abuses that I'm very. Can blockchain fix this? Not at this point. And again, I think that goes back to what we said. Like, what is this? What is this technology really for? And how do we take back some of this? And I think it has to do with a lot of companies really making products that are consumer focused and facing and data and privacy oriented, and make them in such a way that people start using them. But then again, like you said, it's like liquid, path of the least resistance. The centralized service is always that collects your data. That's going to be cheaper. Is always going to be better for the end consumer when it comes to that experience. Maybe not for your data and your privacy.
Yeah. So on Friday, Adam and I recorded a podcast with a Stanford professor, um, which should be coming out hopefully today. I have it pretty much almost all the way edited. Um, but one of the things he talked about was how, and this is kind of moving away from the actual DeSci conversation, but just how like data and AI is going to accelerate. And basically, he said that at this point at Stanford in PhDs, they're pretty much telling their PhDs to use AI to help figure out questions and to actually help think of their PhD question, which is just mind-boggling that you would do that. If you would have said that 5 years ago. And so, in a lot of ways, it's like the genie's out of the bottle, um, and we have to find ways to keep this stuff public. And this gets into um, the Aaron Swartz thing, where like understanding where the research for a lot of this comes from, or like who backed a lot of this. And this, I mean, this gets into the DeSci conversation of like beyond just like 23andMe and like my data of like my genome or my DNA, but just like all scientific research out there, right? To kind of bring it back and recenter the room, like on DeSci, right? DeSci is about um, decentralizing science. And so, like, in a lot of places all over science, there are like unnecessary barriers um, to research, to shared information. It's once I started talking with someone about this, there's a guy in San Francisco named Jeff who hosts DeSci meetups. And he used to work for a project that was a client of mine called Cookbook. But yeah, Jeff used to tell me all about all this, and so it's really, really bad how these barriers exist. And so this curious case of Aaron Swartz is the perfect example of this, where Aaron Swartz is the co-founder of Reddit, as well as one of the like original technical architects and like proteges for Creative Commons, which is the website that pretty much hosts like free images and free content and free, I don't know, free lots of things, whether it's like images and audio files, that sort of things. And so Aaron Swartz basically realized that JSTOR, which is like the most common research database in crypto, or not crypto, in academia. Um, yeah, here he is. you can see there he's often considered a martyr and a protege, um, and it's something where basically he discovered that JSTOR, which is this academic database for research, he discovered that pretty much all of it is used for research, or for it's used by research that's in the public domain. And so this is like already stuff that the public has paid for, right? We've funded this research, right, through grants, through whatever initiatives, blah blah blah, through just your taxpayer money into the university. So this is already like public knowledge, and so it was put behind it's in JSTOR. They make people pay for it, and so his idea, Aaron Swartz, was to download it all and liberate it. Then he was suicided. There's kind of some mystery around that as well. Um, but he's basically seen as a martyr for somebody who was trying to liberate the like scientific information, who was like seeing these limitations and these barriers that I was just talking about. He was seeing them like way before a lot of people. I mean, a lot of people probably recognize them. I'm sure people in the field knew these existed, but he was really trying to make it a like uh public cause. And that was very much something where like I originally learned about this idea of like decentralizing scientific information and how important it is. Um because this is essentially like knowledge is power, right? That's like what it comes back to, and is, you know, getting as simple as like changing from the Gulf of Mexico to the Gulf of America. How you label things, how you classify things, how you put things down is very important, especially from the perspective of like people in power, like a government or somebody who's trying to um, protect information and keep it for themselves. And so, um, yeah, the curious case of Aaron Swartz and scientific information is um, an old internet story that always needs retelling because people forget it. People don't realize like how important he was too. Co-founder of Reddit, like Reddit's like one of the biggest websites in the world. Yeah.
I mean, I think that one thing that first of all, I knew of Aaron Schwartz, but I didn't realize. Actually, I didn't really think of the story. I don't even think I knew the story in whole. Um, but that's super interesting. But what you said about AI is kind of like because we're having this whole conversation about Hayao Miyazaki and Studio Ghibli right now because of X and all of that, and the democratization I think AI has right now. To it read everybody's stuff. It has all the information, and sooner or later, this is all going to be really siloed, and that information is going to be a very powerful control that's locked behind a walled garden or a paywall. And you see like things like DeepSeek, and DeepSeek is so interesting because I think it's a form of economic Cold War that we're in right now. But that's a whole other story of my theories. But we see the importance of having the information and what it's doing for people. And then I almost feel like there's two places that we're in right now in the crossroads. The one it is the DeFi and traditional finance crossroad, where we are merging into a more traditional finance using the technology that we all pioneered by losing money on shit coins and meme coins. That we literally crowdsourced funded by being degenerate gamblers, and now it's going to be merged into traditional finance, DeSci, and all the research done by U.S. tax dollar grants being put into, like you said, JSTOR and other places that is now walled garden, and now that's being moved into a GPU NVIDIA-based cloud service that is going to be locked behind a paywall owned by OpenAI and Microsoft. And even more with privacy and in our data, which is all such an interesting crossroad we're in right now, where I think that we've already got taken advantage of, and now we have the tools to kind of liberate a little bit and fight back against it. But now I think it's just like, do we go X way, where you said open source, or do we go right back into a place where it's even a little bit more, I don't want to use the word dystopian, but controlling, a little bit more monitored, a little bit more, and it's a very interesting place that we're in right now.
Yeah, part of the conversation, we had with the Jan Liptar, the Stanford professor, as well as just things I'm seeing all over the place when it comes to AI, is the guardrails and uh, the verifiability of AI. So being able to
Yes.
verify the actual tasks and executions that it makes, um, and being able to verify like what it's doing and where it's getting its information, so that you can confirm whether or not it has a bias or not. And so that those right now to me are some of the most important things, is making sure that AI is built with those guardrails, um, as well as like I mean, thinking of the guardrails though, like it's tough because there's something we talk about with the Stanford professor too is um like you want AI to have the ability to hallucinate, which was like a really interesting thought to have. Like you want AI to have the ability to um like think abstractly and think outside the box. Like there needs to be a way for it to do that, like a human, right? Um, and yeah, and he described it as AI having hallucinations, which I thought was really interesting to think about. Where then I tried to probe him on the concept of like, well, then would you be able to like give an AI like a drug or a bug or like a virus to cause that to happen? Um, because I the reason I thought of that was because I recently watched a documentary on
Because of all the LSD
Nirv-
you've done in your life. Is that
no, I
what
recently watched a documentary about Nirvana, about Kurt Cobain. And it was
Ah,
about how Kurt Cobain had this really painful stomach virus and like stomach pain his whole life. And he refused to take the medicine for it because he believed that the pain that he suffered helped his creative process. And then he began to like self medicate with other things like opiates and alcohol and things like that. But that was just like a part of the documentary that stuck with me, that he felt that the pain was like part of his creative process. And that was something that we kind of touched on with this AI concept, was like that AI doesn't have that ability to learn like that in the same way that a human can. So interesting stuff. Like again, AI is just everything that's going to happen with it. It's going to
we're,
be
we're getting
crazy.
we're getting really deep here, and but I agree with you. The guardrails is a absolute problem in my opinion with OpenAI. Oh, I don't. I really don't know why people say Grok is the best AI right now, because I don't think it is. But one thing it does have that is better than everybody is that it doesn't have the same guardrails. And even though it kind of sucks in like at least 90% of the applications I want to use it for, it never gives me the guardrails of OpenAI, which is absolutely frustrating as all hell when you're trying to just have a conversation and of yeah, I want it to hallucinate. I want it to be a kind of like, I want my AI to be like a weird individual that I kind of talk to, and if I don't like this person, I erase them and start new again. You know, and and because I'm trying to bounce ideas off of somebody that who knows more than me, but also challenges me too. And AI and these guardrails just won't allow it to do it in different ways. I don't care about these trademarks and copyrights and stuff like that. I think that it should read everything and do everything, and I think that it should be on the individual how you use it. And if you're monetizing likenesses of people's art, then yeah, you should get in trouble. But not just by just creating it, it shouldn't have a guardrail on that in general. But I think that throughout time, and I know we're getting kind of totally off topic for crypto in general, like number go up, but I think it's very important that, and it's something I keep stressing about because I think again we're at a crossroads, is that people always find a technology to try to get back some sort of power or privacy or liberation. I mean, look at like I think the Constitution of the United States of America is a great idea of technology or a solution, right? Of like, hey, we have this king and stuff and feudalism and blah blah, and we can't do the things that we want to do. What do we do? Well, we create the First and Second Amendment, and that's huge, right? And that's one kind of like an adaptation of how do we get power back to us. um, and then you go to the internet of flow of communication. I think that was the internet, and just open source, and quick, fast communication was a direct result and evolution from how the 3, 5, and 8 news channel that we always watched in the newspapers, and the barons or the gilded age people that would own these media companies, to where we're at now, where we're at DeFi and tokenization and decentralization, where we're like, hey, all of that evolved into what we're at now. We have another tool here that we have an ability to figure out how do we use this, and how do we pivot even a portion of society to be the 1776, if you will, in the digital realm of money and data and voice and speech. Um, for lack of a, did I just go Alex Jones on everybody? I don't even know what happened there.
Well, I'll take
7076.
I'll take it one step further. My partner had me listen to an astrology podcast that talked about how basically the way that the alignment of the planets and everything right now is the exact same as what happened in the American Revolution, the Haitian Revolution, and the French Revolution. So there are
Shut up.
celestial.
That is
There are,
not true. That's not
I
true.
mean, I am just
Is it
talking
really
about the
true?
celestial. That's what the podcast said.
Oh, that's what I gotta Google that, because that's interesting. So they're trying to tell me
Yeah.
all the stars couldn't align, but the planets you're talking about.
Yeah, I mean, I don't remember exactly what it was, but whatever the celestial alignment for astrology that influences, like, that they claim influences happenings on the planet with energy and all that kind of stuff.
Oh well, this is not what people signed up for.
Right.
Can you tell us about
Let's talk
Barachain,
about
please,
Bearchain,
sir?
dude. Yeah,
Yeah, thank you.
Bearchain's been doing really well. Yeah, like people were uh, reactive to Bearchain's launch. They had a huge hype. Um, a lot of people didn't like the airdrop allocation, how it went to kind of like Kaido yappers who were supporting Bearchain, and like influencers basically. And then there was like a degree of like setting up the VCs. Um, I forget exactly how it was. It was like how the VCs were like had to buy the like NFTs and then they dumped the NFTs. It was something like that. Anyways, the token has been performing really well. Like if you look at like the 1 year look on the chart, like you'll see it's been doing pretty well. Like it's not tanking, it's not dying, and the TVL is doing really well. So like this week is um just another like unlock of their phases, where the proof of liquidity is finally activated, which is like the way of like emissions for their stablecoin, um, is that like depositing and showing value on. We can kind of just read it here. I think I have the notes. The proof of liquidity system aims to decentralize the supply of Bearchain's governance token. Instead of locking tokens in a vacuum like in traditional proof of stake blockchains, Bearchain encourages users to stake assets in DeFi liquidity pools to earn the stablecoin BGT. Validators then rely on this BGT to being delegated to them to boost their influence in consensus. So, in other words, the network security is tied to the ecosystem's liquidity, right? Like the consensus liquidity is tied to like how much people are like depositing into certain DeFi protocols, and then those DeFi protocols are rewarded with the consensus power of how much liquidity they have. Instead of just saying like how much token they own, that's reflective of like just how much the protocol is worth, how much activity is on the protocol. Um, and so it's another one of just like Barachain's curious changes from traditional DeFi, and traditional proof of stake. Um, but it's good to see the platform is doing well. Um, I think that's just like a positive thing that we're not seeing these launches of these kind of alternative L1s, and there's just dry liquidity and there's no activity. Even on that note, the Monad testnet, which has been going along, has been performing really well. Adam and I spoke about this on last week's um, Trends with Benefits podcast. But yeah, I mean, the Monad testnet, they're doing really well, and they had to halt the testnet recently, but that's very typical for testnets. There was like a whole hoopla on crypto Twitter. It was like they paused the testnet to fix things. Like it's literally what a testnet is for. So everyone needs to chill.
Yeah,
But yeah,
whatchamacallit, I'm sorry. Go ahead.
no, I was just gonna say, and so like I don't know, that's just kind of some alt L1 news for this week because I mean, Bearchain had that. It was like basically a week ago on the 25th, so almost a week ago when this launched, but it's still relevant.
Speaking of alt L1 news, I'm going to go with my boys XYO over there. They're gearing up to launch their own L1 over here. I mean, look, people really don't launch layer ones anymore. Maybe that's a bad statement. They do. They do. But most of the time, everything that's being launched is on Solana or Ethereum or whatever. Or it's on a layer two, or it is a layer two, or even some people started talking about layer threes. I was like, what the hell is that? We need to start scaling layer twos now. That's crazy. But XYO is going to make their own layer one. I'm excited to see what they're going to do too, because look, at the end of the day, layer ones create a lot of value, and if they're launched in a proper way, you can have very interesting things built on them, and well, like you talked about the total value locked of Bearchain. I mean, that's a lot of value, and then the people that are going to use it it's just interesting what you can do with the layer one opposed to like a industry or a specific use case specific token that you have to say, oh, what is this going to do? Like I'm going to do exactly this, and then it's like, oh, if you don't do that, you're kind of screwed. Layer ones is more of like, hey, we can do everything now.
Yeah, people should take a look at the Daily Crypto News article that will be coming out today from Samuel. I think it's set to come out in about 2 hours, but it's about Justin Drake, who's like an original Ethereum developer. How he has this concept that's gaining traction now about native rollups. Right, that sounds like an oxymoron. It's about like bringing some roll-up settlement back onto the mainnet because it's more efficient.
Interesting.
Right? So, and you're just going to start to see this. Like, I think, Patrick also has published some op-eds on Daily Crypto News about how, the vision for Ethereum is still very much like on the layer one. Like, they still very much see like all settlement and consensus happening on the layer one. Like they still see it as like part of the vision in the future. And so it's curious. Like, I don't know, how long are these L2s going to last? I don't know.
Yeah, we will see. I can tell you right now, I'm holding some major bags in L2s right now that haven't been performing well. That's for damn sure.
They're not just going to disappear. That's
yeah, well, they're not mooning either, and most of my funds have disappeared. So not happy about that.
Nothing's mooning right now.
You know what? That is true, but there's some. Bitcoin's holding its own. Again, Bitcoin is not at its all-time high, and it's, what is it, 30% down from it, 20%, 25% down from its all-time high. So it's not mooning, but I mean, I think that, and nobody should sneeze at $82,000 Bitcoin. Like that's, if Ethereum kept up in its pace with Bitcoin, it would be sitting at $6,000 or $7,000 Ethereum right now, but it's just not. There's a different. So some things are doing really well. XRP is doing really well. We're over $2 XRP. I mean, again, XRP rolled at 25 cents for like 7 years. It was like more stable than Tether at most points. It was crazy.
Yeah, no, for sure. All
right, let's go into some of these listener questions. Let's see what's going on here. Speaking of Tether, we do have a listener question talking about just that. And yes, I did not plan on that kind of transition, but bro, professional. I am fucking.
Yeah, we like it.
Yes, exactly. All right, so our boy Twin over there from, I think he's the Netherlands. He said, Matt, got a quick one for you. Never touched on stablecoins, but even with my diverse portfolio, why would I choose USDC over a crisp US dollar? How does it stay at one? Who covers the cost? Who profits? This might be too big for the show, but it isn't actually. He said, convince me, why should I buy stablecoins or should I skip them? This is an interesting question because it shows that, let me get that bear chain off the screen. It shows that people don't understand what stablecoins are. In my opinion, and maybe Kyle, you have a different opinion about this, or maybe I'm just wrong. By the way, I think about it. So let me give you a bit of history. So stable coins were used at the beginning is because look, if you have US dollars, you go and buy a Bitcoin, it was OTC or all kinds of different ways you bought Bitcoin way back in the day. Then you had exchanges to exchange them. You needed a way to cash out digitally your Bitcoin to a stable something if price goes up, so you could lock in gains, right? So a stablecoin was needed for that, or else you would have to go from Bitcoin straight to US dollars, and that's cash straight back into Bitcoin, which was cumbersome for banks, cumbersome for everybody. It was just a pain. Stablecoins helped you go from, say, I bought $10,000 worth of Bitcoin, it went up to $12,000 of Bitcoin, and now I want to lock in those $2,000 gains. Instead of going from Bitcoin to, say, Ethereum, which then you're going from another moving target to another moving target. So that's one reason is that you need a digital representation of something that was stable, denominated in a US dollar or a euro or crypto or some kind of currency, so you can move your Bitcoin plays or your speculative plays or your investment plays into something. The other reason is there was this whole question about taxation back in the day. I don't know if Kyle, if you remember this, but of like kind exchanges, was crypto to crypto a like kind exchange? And if it was, you were not taxed on it. So if I bought Bitcoin or Ethereum with my Bitcoin and then moved it back to the USDC and then back into Bitcoin and then back to Ethereum, then USDC and then back into Bitcoin, all that wasn't taxed until I actually got cash out, and then I got taxed on my profits. So that was whole thing back in the day of like, hey, I'm just gonna say it's like kind exchange until the government said that's not like kind exchange. You get taxed every time you move your token, and that goes back into Mickey Papa's question down there. He said that you touched on kinds of stable coins. I'd like to know how that was showed transfer, say Bitcoin to Ethereum, viewed by the IRS. If you do it today, basically, if you sell Bitcoin, $10,000 worth of Bitcoin that you bought at $5,000 and buy $10,000 worth of Ethereum, you owe $5,000 in gains on your Bitcoin, no matter how much Ethereum you got. You have to claim that. And if Ethereum goes up, and sell it back to Bitcoin, you owe gains. Or if it goes down and you sell it, you have losses. Again, conversely, if you buy $10,000 worth of Bitcoin and you sell it to Ethereum for $5,000, you can harvest $5,000 in losses and apply that to any other cryptocurrency or losses or gains that you have. So these are all taxable events. Every time you buy or sell cryptocurrency now, it's a taxable event, and you need to know where your cost basis was. I'm talking quite a bit, but I have a little bit more to say about Twin's question. So USDC is, what I'm trying to say here is USDC and USDT is a tool. It's a tool to be used within the crypto space to either offboard or onboard your cryptocurrency. You can hold it just like the US dollar in the digital space. You can get paid on interest, say on Coinbase. I think they're paying 4.25% to hold USDC in their wallet there. Then you get paid on that. It comes in monthly. That's cool. If you have $1 million, you're making $4,000 a month. That's great. If you had $1 million, most people won't have $1 million, and if they do, they're not keeping it in Coinbase. But it's just a tool. So do you want to hold USDC or USDT? It's like, do you want to hold US dollars? Yeah, for some things. With US dollars, you can buy and sell, you go to have a beer at a bar, you buy a house, you buy a car, whatever. It's like, it's a tool. You use the tool to buy different things, assets or love or fake boobs or whatever you want to do with it. That's the tool. And USDC is the same thing, but in the digital space where you can buy cryptos, or you can use it to use your assets to get paid yield or whatever for that. So anyway, that's what I think. That's what I think the stablecoin space is for. What about you, Kyle?
Yeah, simply put, a stablecoin is just a digitalized dollar. And where they retain their value, right? The U.S. government, for example, has not sanctioned like a digital version of itself. right? That would be a CBDC. So what has happened and what grew out of the demand that you just alluded to, when exchanging between tokens, private companies, right? Circle, who's responsible for USDC, Tether, who's responsible for USDT, US dollar Tether, US dollar coin. There's plenty of other stable coins. For a long time, there was Binance US dollar, which through Binance US, they actually paused and discontinued, like made it so that you couldn't send dollars in and out of the exchange anymore, because at the time, Binance US was not able to prove that they were holding one-to-one backed uh, like treasuries for the stable coins. Paxos, the deliverer, there was some issue with them and Binance US. But essentially, like how they hold value is Circle or Tether holds assets that are equal or equivalent to the dollar. So they hold bonds, they hold treasuries, they hold dollars, in order to be able to always exchange one to one. When Binance US had some of those issues back in the day, um, there were problems because I remember an issue happening over the weekend, and they had to wait until Monday when the actual bank opened, because crypto you can withdraw and deposit on the weekends, but on banks you can't. So Binance US was having massive withdrawals, and they weren't able to keep up with the people, until they were going to be able to get more money on Monday. So it was almost like a banking crisis at DeFi, right? Um, and it's just an example of showing you how these industries are still not entirely decoupled. The Silicon Valley Bank example from, gosh, I want to say it's like 2023 now. That was a good example of how a traditional finance bank could fail and affect, could essentially almost depeg USDC. I actually think USDC depegged at that time, went down to like 93 cents to the
I
dollar.
think you're right. Yeah.
Yeah. So that was like a major crisis, because that was like one of the strongest coins around. Um, and our listener here, Toon, um, I would have him. I would recommend him to go take a look at a recent article we published on Daily Crypto News about the waning, or the losing, the people, how there's losing interest, waning interest in the digitalized euro, and how just recently there was just people who, like, the companies, private companies that had digitalized euros are seeing like no activity on it, and they don't want to use it, right? So there's like digital stable coins can exist not just as a dollar. You could have there's a digital yuan, there's a digital euro, right? It would be interesting to look at those numbers on the euro, because the euro in the last like 3 weeks has uh, gone up and gained and appreciated very high against the dollar. um, but yeah, it basically comes down to like
Boo. By the way, boo.
but I remember watching congressional hearings a couple of years ago, back when SBF was still around. But they were talking about how the United States needs to uh, like recognize that it like owns and like has hegemony as the stable coin of choice in digital assets, and that like if they don't open up to it, like it could be a problem. But anyways, yeah, stablecoins are just holding your money in dollar, on chain. It's just on chain dollars.
And like I said, Tune, really quick, you can get paid from this because just like holding, but it's just like a money market. It's like I know Chase Bank has an interest bearing account that you can put cash into. I know that Apple still uses their Apple Bank or Apple Card where you could get paid APY on that, yield on that. So
Yeah,
it's the same
like
thing,
like
but for digital.
Circle makes their money. To answer the question further, Circle makes their money by like holding these reserves and
Yeah.
just having like a savings account, right? They get the percentages by having billions of dollars in assets. Um, and that's something Coinbase gets a bunch of money from stuff like that too. It's not just Circle, right? These exchanges engage in it too.
Yeah, exactly. So if you're again, if you're holding, $100 billion, like, or $144 billion, like Tether, and you want to allocate, let's say you keep 44 billion liquid, and then you allocate 100 billion for investments, say like into short, medium, and long-term treasuries, maybe some other kind of ways to get some interest. I mean, if you can manage a way to find 4 to 5% on $100 billion, you're making pretty good revenue. And then, of course, there's other ways to even make more that I'm not savvy about because I am. That's why I'm poor and I don't own Tether. Um, but so like, look, they're doing fine. Basically, they're taking your money, they're putting it to work, and they're giving you a representation. It's actually quite brilliant. It's the stupidest and shittiest thing I've ever seen, but it's pretty brilliant. I'll give you $1 and I'll write on a stupid piece of paper, a digital piece of paper, you have $1, and I'm gonna go use the fuck out of your dollar for anything I want to use it for. It is brilliant. And if anybody can figure out a different way to do that with something else, let me know. Matt at dailycryptonews.net. Let's start the stable
I have an
portion
example
of business. Yeah, go ahead.
in California. In California, they invented something that's called paper water, where
What, dude?
the water that
That sounds so
exists in
California
like
too. It's gonna be like paper
in like
avocado
the aqua.
toast. Jesus
No.
Christ,
It's like
you California.
it's like one of the problems that like helps prolongate and accelerate the drought. There's actually like they're called the Resnick family. They own Fiji Water. Like these are like
Right.
some of the most these
Yeah.
are like some of the most evil people in the world. Um, and they basically invented this concept called paper water, where like the groundwater of the future exists on paper, and they're able to like fractionalize that and sell the water of like the future. Um,
Stop.
where where like
I
where
love
it's
it.
like essentially during like I don't know, I want to say like 2011 to 2014 when there was a quote unquote drought in California, there was still water. The Resnicks just had it all, and they were just selling it at a huge high price premium.
That's crazy, dude.
Yeah, they're
What can I
crazy.
sell in
It's
my
a
house? If anybody has some ideas, I have a 2,000 square foot house on a 10,000 square foot plot of land. If I can tokenize the future oil in here from future dinosaurs or something, and sell paper dinosaurs, let me know. I want to make $1 billion today instead of having to wait 250 million years. Please, let's let's figure out ways. Next listener question, sir. Last one, by the way. We're at an hour, but we have to go a little over. Um, Hugh. His name is Hugh. Hugh was also the Borg that they found,
he's
and
asking
he.
about some different DeFi tokens, and
Oh yeah, dude.
I'm
I
familiar.
didn't
I'm familiar
I
with a
didn't know how to
couple of
answer
them, so
this.
that's why. Yeah, I
Yeah,
was
go
familiar with a
for it.
couple of them, which is
Well,
why.
let me read it real quick. Hold on. He said, "Loving the long live stream shows team. That is us, sir. We are the team. Would love to know your thoughts on some coins I've picked up. Here, I picked them up. I probably should have waited for our thoughts, but whatever. Banana gun, grass, when, WEN, GRT, and Jasmy. This dude, did you just like literally put this into like a meme coin generator and then just pick whatever they came up with? Thank you, Hugh, for writing in. Kyle, go for it.
Well, I'm familiar with Grass and GRT. So Grass is a it's a
Dude said
token that
banana
like
gun. Stop,
sells
dude.
your data or like harvests your data on your phone. Grass kind of jumped on the scene because they were one of the native apps in the Solana Saga phone when it dropped about 18 months ago. And basically, all you had to do was turn on your Solana phone, leave it, and turn on the Grass app, and it would just start farming, and they took your data, and yeah, it's just like a data harvesting app. Um, that's from my perspective. Like you just like share your data, and it helps. The more people who do it, the collectively, the greater it is. Um, right, the Grass token. Yeah, the easiest way to participate in the growth of AI, you're just sharing your internet bandwidth. That's like all it is. You're just sharing your phone's capacity. It's people think it's a scam. Is like the whole point is that it's like a lot of people think it's just like a data harvesting app. Um, And then the other one that I'm familiar with is GRT, which GRT is the token for the graph. Um, and I just want to double check that to make sure I'm 100% sure. Yeah, the graphs GRT. And the graph is actually, in my opinion, like a really reputable project.
Yeah,
You
yes,
know,
sir. I remember it back in the day.
they're yeah, like they're like the Google of blockchain. They're like the Google search. So it's like they build the blockchain data databases in order for different projects and different like everything. Like Uniswap uses them, for example. Like um, they call the data that's in the graph. So the graph is like almost like an indexer for all your favorite DeFi apps and DeFi protocols. And so the graph is very much like a important, powerful. I don't necessarily want to call it like an infrastructure tool, but it technically it is an infrastructure tool in a lot of ways. But it's a data tool for like everything to be able to call information and reflect accurate like prices, reflect all sorts of things. Um, and so yeah, the graph they help actually they're the people behind the House of Web3 in San Francisco. So big shout out to them for always hosting that building. Um, and then when like I'll just say this, I would be hesitant to buy any token that's called when. um, just because it's probably not now. It's when is it gonna happen? It's not now. Um, Banana Gun I think I've heard of. It's like a swap tool, I think. Um, but uh, I don't remember. Is it like it's the super fast way to do trades and swaps, right?
Bro, I don't
Yeah.
know.
Yeah,
I
it's the
don't know.
super fast Telegram trading bot. That's what it is. Yeah, yeah, yeah. I have heard of this, and yeah, people like it. Um, so I would imagine it's something where you're getting residuals of the trades and swaps that people are making on Telegram, and that's how the token value goes up. But
Wait, how is when down 100% all time? What the hell's going on there? How are you down
there's
100%?
probably a million tokens named When,
Oh, this is probably the wrong
but
one. Yeah, you're right.
I think When is like a token that was airdropped to the Saga phone, because I have a Saga phone
This
and there's
one.
a When token in there.
You
Like
actually bought that thing?
I think it's that first one, the cat one. Yeah, it's that
This one, yeah.
$16
This is
million
when I
cat
was.
one. Yeah.
Oh, this wasn't the one I was looking at. Yeah, all time it's down 100%. What the hell's going on? Oh yeah, because it started there and then yeah, crazy. Okay,
Yeah, I
that's
believe it's just like a
no
Solana meme
bueno.
coin. So
All right, well, Hugh, thank you very much.
don't invest what you're not willing to lose.
And trust me, in this game, you lose a lot. Oh, do you lose a lot? Um, Thank you, Hugh, for writing in about your purchases. I just like how he wrote in. He's like, "Hey, love the show. Um, I I picked up some coins. Now I want your thoughts." Like,
Yeah.
like,
How about I'm gonna potentially buy these. What do you
yeah,
think?
I'm looking at Banana Gun, bro. Like, what do you think? No, I bought this. Am I gonna lose all my money? Yeah, maybe. I don't know, man. Anyway, hey, everybody on the live stream, thank you very much for tuning in. We went a little bit meta today, but you'll have that. Again, you can check out Kyle at dailycryptonews.net. That's KYL. I'm sorry, yeah, KYLE at dailycryptonews.net. I am MATT at dailycryptonews.net. Make sure you follow us on Substack, dailycryptonews.net, Spotify. Click those 5 stars. You can leave us questions and comments. Usually, we pick the best ones from the week that we thought were very interesting that to talk on air or somebody knows about. Like Kyle knew about those tokens. I really want to touch on the stable coins because I thought it was pretty 101 that everybody should know. And we'll pick those out from the questions. And of course, happy hodling, everyone. Thank you, Kyle.
All right. Happy Sunday. Talk soon.
There we are. We're done.